Hello viewers, welcome to my channel. I am Hashim Ali Khan here. Presently I am giving the lectures on the topic depreciation, which is in the subject Financial Accounting 1. So already I have given so many videos solving the problems on depreciation. First video was on the introduction theoretical part of depreciation. I have explained you in detail. Hope my regular viewers have already watched that video of introduction to depreciation. Meaning, definition, characteristics, reasons for providing depreciation, methods of calculating depreciation, so many things I have explained in detail. So without understanding the theory, it will be difficult to solve the problems. So my suggestion to the regular viewers to have a complete command on the subject, go and watch the video, complete video on theory of depreciation. Then the next problem I have solved short problems on depreciation. Nearly some 7-8 problems we have solved on short. Then long problems. The main problems already we have completed 10 problems. This is the last video in which 2 more problems we'll do it. Then we'll finish off this topic. We'll go to the next topic in this subject. So to those who are first time to my channel, I suggest you to visit the playlist of my channel. I have uploaded a number of videos on different subjects like advanced accounting, cost accounting, corporate accounting, financial accounting, business statistics, and financial management, investment management. So many videos I have uploaded. Watch the video, go to the playlist, select the subject, watch the video. Definitely you can get a lot of confidence on the subject. And my suggestion, don't skip the video in between. If you want the complete knowledge, watch till the end. Now I'm going to start the next problem, problem number 11. Before starting the problem, I expect my viewers to have a hard copy printout of the problems, which I have given in the link under my description. So go to the description, last line you will find the link, click the link, get a copy and keep it ready before starting watching the problem. Now I am reading out problem number 11. See the 11th problem. Mr. Srinu purchased a machine on 1st January 2007 for rupees 5 lakh, paid freight and insurance 50,000 and incurred installation charges 50,000. So Mr. Srinu has purchased the machine for rupees 5 lakh. Cost of the machine is 5 lakh and installation charges and insurance 50,000. So totally the cost of the machine is 6 lakh rupees. He purchased another machine on 1st July 2007 for rupees 2 lakh. So in the year 2007, 2 machines are purchased. The first machine is purchased for 6 lakh rupees and the second machine purchased on 1st July 2007 for rupees 2 lakh. On 1st July 2009, he sold half of the first machine for rupees 1,90,000. Actually, first machine was purchased on 1st January 2007. This first machine was sold on 1st July 2009. Half of the machine is sold, not complete machine. Half of the machine is sold for rupees 1,90,000 and purchased another machine for rupees 1 lakh. So in the year 2009, 1st July, 1 machine sold and 1 more machine purchased. Depreciation is provided by 25%, at the rate of 25% per annum on straight line method. So straight line method, fixed installment method, original cost method. So 25% on the original cost and the depreciation amount will remain same. Assuming that the books are closed every year on 31st December, prepare machinery account for the year 2007 to 2011. So every year accounts are closed on 31st December and we have to prepare the accounts from 2007 to 2011. Now see carefully. Machinery account. Date particulars JF amount. Date particulars JF amount. Debit side, credit side. Debit side. 2007 January 1st. The first machine is purchased to bank, cost 5 lakh. For purchasing this machine, freight charges are paid 50,000. Installation charges are paid 50,000. The total cost of the machine will be 6 lakh. 5 lakh plus 1 lakh, 6 lakh rupees is the total cost of the machine. This machine is purchased on January 1st. Now, July 1st, same year, 2007, same year, July 1st, another machine was purchased. The cost of the machine is 2 lakh. Now, we'll close the year. 31st December 2007. First year we are closing by depreciation. Now we have to provide depreciation on both the machines, first machine and second machine. So 25%. तो 25% of 6 lakh, 5 lakh plus 1 lakh, 6 lakh. So 25% of 6 lakh is the depreciation of the first machine. So 25% of 6 lakh, 1,50,000. Next, 25% of 2 lakh, but for 6 months, because it is purchased on July 1st. So July 1st to December 31st, 6 months. So 25% of 2 lakh into 6 by 12, you will get 25,000. So 1,50,000 plus 25,000. 1,75,000 is the total depreciation. Now take the total on the debit side, 8 lakh. 8 lakh minus 1,75,000. 6,25,000 is the balance. This is the balance. Balance at the end of first year. Now we'll come to the second year. To balance brought down 6,25,000. Now second year. Now second year, that is 2008. There is neither purchase nor sale. No purchase, no sale. So we calculate the depreciation on the total amount. 6 lakh into 25%. 6 lakh into 25%, 1,50,000. 2 lakh into 25%, you get 50,000. Full year depreciation on first machine and second machine. So total depreciation is 2 lakh. So debit side, you take the total 6,25,000. From 6,25,000, subtract 2 lakh. So 4,25,000 is the closing balance of machinery at the end of second year, 2008. Now we'll come to the 2009. 2009 January 1st, to balance brought down 4,25,000. Now during this 2009 July 1st, one machine is sold and a new machine is purchased. The machine which is sold is half of the first machine. Half of the first machine is sold. So whenever machine is sold, 3 entries will be passed. The first entry is sale proceed, bank account data to machine. So buy bank. In 2009 July 1st, buy bank, sale 1,90,000. Now we have to provide depreciation for this machine which is sold away. So half of the machine. What is the total cost of the machine? 6 lakh. 6 lakh rupees is the total cost of the full machine. Half of the machine is 3 lakh. So we calculate 25% of 3 lakh. 25% of 3 lakh into 6 by 12. Because the machine is sold on July 1st. Our year begins from January 1st. So January 1st to July 1st, 6 months, 6 by 12. 37,500 is the depreciation up to the date of sale. Now we have to find out the profit or loss in working note. Cost of the half of the machine on 1/1/2007 at the time of purchase. 6 lakh into half, 3 lakh rupees is the cost of the machine. Less depreciation up to 31st December 2007, first year. So 25% of 3 lakh, 75,000. Subtract 75,000. Less depreciation up to 31st December 2008, 25% of 3 lakh, 75,000. Then depreciation up to 1st July 2009, half year. So half year depreciation 37,500. 25% of 3 lakh into 6 by 12, 37,500. Subtract the book value of the machinery at the time of sale is 1,12,500. 1,12,500. This is the book value of machine on the date of sale. What is the sale proceed? कितने में बेचे? 1,90,000. Book value is 1,12,500 and it is sold for rupees 1,90,000. So there is a profit on sale. How much is the profit? 1,90,000 minus 1,12,500. 77,500 is the profit on the sale of machine. So entry will be machinery account data to profit and loss account. So machinery account debit side. To profit and loss account, profit 77,500. If we get loss, we will write it on the credit side. If we get profit, debit side. On the same date, July 1st, a new machine is purchased, bank, cost 1 lakh rupees. On the same date. Now, we have to close the year 2009. 31st December 2009. Now depreciation, by depreciation. Now 3 machines we have. The first machine, half of the machine. Second machine, we have full machine. And third machine, in this year we have purchased. So first of all, 25% of 3 lakh. First half machine. So 25% of 3 lakh, you will get 75,000. Second machine, 2 lakh rupees. So 25% of 2 lakh is 50,000. Now 25% of 1 lakh into 6 by 12. 25% of 25% of 1 lakh into 6 by 12. Here 25% of 1 lakh into 6 by 12, 12,500. So 75,000 is the depreciation on the first machine, 50,000 is the depreciation on the second machine, and 12,500 is the depreciation on the third machine. The total depreciation 1,37,500. Now take the total on the debit side, 6,02,500. From 6,02,500 minus 1,90,000 minus 37,500 minus 1,37,500, balancing figure 2,37,500. This is the closing balance of machinery at the end of third year, that is 2009. Now we'll come to the fourth year, 2010. January 1st, 2010, to balance brought down 2,37,500 coming from the last year. No purchase, no sale in the year 2010. We close the year. 31st December 2010 will provide the depreciation. Now depreciation on the first machine. First machine depreciation is 75,000. 75,000 is the depreciation on the first machine. Second machine depreciation is 50,000. And third machine depreciation is 25,000. So 75,000 plus 50,000 plus 25,000. 1,50,000 is the total depreciation. So 2,37,500 minus 1,50,000. Balancing figure is 87,500. 87,500 is the balance at the end of the fourth year, 2010. Now we'll come to the last year, fifth year. The two balance brought down 2011 January 1st. 2011 January 1st. Two balance brought down 87,500. This is the brought down. Now at the end of the year, 31st December 2011. Now we have to provide the depreciation. Now see here, first machine depreciation is over because 25% per annum we are charging the depreciation. 25% per annum means in 4 years it will be fully depreciated. 4 years are over. This is the first machine purchased on 1st January 2007. Purchased on 1st January 2007. So first year, second year, third year, fourth year. The first machine, it is fully depreciated. So no depreciation on the first machine. Second machine also, this is the last year. First year depreciation, this is the second machine. On the second machine, first year 25,000 depreciation. First year 25,000 depreciation. Second year 50,000 depreciation. Third year 50,000 rupees depreciation. The last year 50,000 rupees depreciation. Now you can see 50,000 plus 50,000, 1 lakh. 1 lakh, 50,000 plus 50,000, 1 lakh, plus 50,000, 1 lakh 50,000, plus 25,000. The 1,75,000 depreciation have been provided. 1,75,000 depreciation have been provided out of the total of 2 lakh. The cost of the machine is 2 lakh. Out of 2 lakh, 1,75,000 is provided. Thus 25,000 rupees is still left. So 25,000 rupees is the depreciation on the second machine. And 25,000 rupees is the depreciation on the third machine. This is the third machine. So 1 lakh into 25%, 25,000. 25,000. The total depreciation is 50,000. So 87,500 minus 50,000, 37,500 is the closing balance. 37,500 is the closing balance. This is the end of problem number 11. Now I am reading out the last and final problem on depreciation. This is the problem number 12. See the 12th problem carefully. On 1st July 2006, Vishal purchased a machinery for rupees 40,000. So first of all, machine purchased on 1st July 2006. The cost of the machine 40,000. On 31st October 2008, 1/4 of the machinery which was purchased on 1st July 2006 was sold for rupees 5,600 as it became obsolete. So actually the first machine, only one machine is there. That first machine was purchased on 1st July 2006 and this machine was sold on 31st October 2008. That means after 2 years. 2006 it was purchased and 2008 it is sold for rupees 5,600. On the same date, the company purchased another machinery for rupees 15,000. Second machine is purchased after selling the first one, but half of the machine is sold, not complete. Assuming the rate of depreciation to be 10% per annum on diminishing balance method. So far in the previous problem we have applied straight line method, but in this problem it is asking you to apply diminishing balance method. Prepare machinery account for the year ended 31st December 2009. Actually the machine is purchased on 1st July 2006. So from this date onwards we have to prepare the account up to 31st December 2009. Company always closes its books every year on 31st December. That's it. This is the problem. Now see carefully from beginning. Vishal, machinery account. Debit side date particulars JF amount, date particulars JF amount. Debit side 2006 January 1st. This is the date on which the machine is purchased to bank, cost 40,000. Now we close the year. 31st December, 10% of 40,000 into 6 by 12. Because we have purchased the machine on 1st July and we are closing the accounts on 31st December. So 6 months. So 10% of 40,000, 6 by 12, 2,000. 40,000 minus 2,000, 38,000 is the closing value of machinery at the end of first year. 2006 completed. Now we are in 2007. So 2007 January 1st to balance brought down 38,000. Now credit side. By depreciation, we are following diminishing balance method, reducing installment method or written down value method, means same. Now depreciation should be calculated on this value, not on original cost. Not on original cost but written down value. What is the written down value here? 38,000. So 10% of 38,000, 3,800 is the depreciation. Now find the balance. 38,000 minus 3,800, 34,200 is the closing balance of the machine at the end of second year. That is 2007. Now we'll come to the 2008. 2008 January 1st to balance brought down 34,200. Now carefully you see. The machine is sold on 31st October. So whenever a machine is sold, 3 entries will be passed. The first entry will be sale proceed. Sale proceed by bank. By bank sale. 5,600 is the amount at which the machine is sold. Sale proceed. So this is on 2008 October 31st. Now we have to find out how much is the depreciation on that machine which is sold and how much is the profit or loss. That we have to calculate in working note. See, come to working note. Profit or loss on sale of machine. Cost of 1/4 of the machine on 1/7/2006. Actually, we have purchased the machine on 1/7/2006. The whole machine is not sold. Half of the machine is sold. So what is the actual cost of the machine? 40,000. So half of 40,000. Not half. 1/4. Sorry. 1/4. 1/4 of the machine was sold. So 1/4 of 40,000. 10,000 rupees is the cost of 1/4 of the machine. From this we subtract depreciation every year. So depreciation up to 31st December 2006. So actually we have purchased on 1/7/2006. Closes the books on 31st December 2006. So 10% of 10,000 into 6 by 12. 500 rupees depreciation during the first year. During the first year. Now 500 deduct 9,500. Now second year 2007. Depreciation up to 31st December 2007. So 10% of 9,500, 950 rupees. Subtract 950. 8,550. This is the WDV of the machine on 1st January 2008. 1st January 2008. Now the machine is sold on 31st October 2008. So we calculate depreciation for 10 months from 1st January to 31st October minus depreciation up to 31st October 2008. So 10% of 8,550 into 10 by 12. This 10% of 8,550 per annum ho gaya, but we require only for 10 months. So 10 by 12. So 713 is the depreciation for the current year. Date of sale. Up to the date of sale 713. So this 713 is the depreciation for the current year. Here I have taken depreciation working note 713. Right? Deduct 713. What is the book value of the machine now? 7,837. So book value of the machine at the time of sale. At the time of sale is 7,837, and this machine is sold for 5,600. Sale proceeds are 5,600. So there is a loss. Book value 7,837. Sale proceed 5,600. The loss on sale is 2,237. 2,237 is the loss on sale. So I have taken here by profit and loss account, loss. Here I will write down loss. How much loss? 2,237. 2,237. Got it. Finished. Now we close the year. On the same date, 31st October, one more machine was purchased. So 31st October to bank cost 15,000. 15,000 worth of new machine purchased. Now, depreciation. We close the year 2008. 31st December 2008 by depreciation. Now we have to find out what is the depreciation for the remaining asset. In the first asset, 1/4 of the asset was sold. So 3/4 of the asset is still there. 3/4 of this asset is there, and also new asset purchased during the current year. On both these machines, we have to provide the depreciation in working note. What is the total WDV of machine at the beginning of the year, 1st January? 34,200. This 34,200 is the WDV of the whole machine, first machine, right? So I have taken total WDV on 1st January 2008, 34,200. This one. From this, we deduct the WDV of that machine which was sold. 1/4 of the machine was sold. Here you can see what is the WDV on 1/1/2008. Here it is there. WDV written down value on 1st January 2008, 8,550. So subtract 8,550. We are removing the WDV of that machine which was sold away. So 34,200 minus 8,550, 25,650. So WDV of the remaining 3/4 asset. Out of this whole asset, 1/4 of the asset was sold away. 3/4 of the asset is remaining. That WDV of that 3/4 asset is 25,650. 25,650. Now calculate 10% of 25,650. 2,565. Now we have to calculate depreciation on the new machine purchase, 15,000. So 15,000 into 10% into 2/12. Because it is purchased on October 31st. Over October completed. So November and December, only 2 months. So 2/12. So 10% of 15,000 into 2/12, 250. Now add up both, 2,815. 2,815, you can see here. This is the total depreciation for the current year, 2,815. Now find out the balancing figure. Take the debit side total 49,200. 49,200. From 49,200 subtract minus 5,600 minus 713 minus 2237 minus 2815. 37,835. 37,835 is the balancing figure. That is the closing balance. The value of machinery at the end of 2008. Now we are coming to 2009. 2009 January 1st to balance brought down 37,875. Now we close the year 31st December 2009 by depreciation. 10% on written down value. So 10% of 37,835. 10% of 37,835. It comes to 3784. 3783.5 you are getting. So I have rounded off to 84. 3784. Now take the total debit side 37,835 minus 3784. 34,051. 34,051 is the closing balance of machinery at the end of 2009. Now brought down 2010 January 1st to balance brought down 34,051. That's all. It is asking you to prepare the machinery account up to 31st December 2009. So up to 31st December 2009 we have prepared. That's it. So this is the end of 12th problem and the last problem of depreciation. So 8 short problems and 12 main long problems I have solved on the board. Hope my regular viewers have already watched all the videos, got a good command on the subject of depreciation, on the chapter of depreciation. So I have explained you in detail. If you are satisfied, give a like to the video, give your special comments on these lectures of these videos, and share it in your group, in your friends, in your circles, so that many students can be able to get the command on this subject. And subscribe if you have not yet subscribed my channel. So next topic I'll take up in the next video. So far I have completed bank reconciliation statement, rectification of errors, final accounts of sole trading concern, depreciation. All these topics I have covered. Next topic will start in the next video. Till then, goodbye, take care.